All right, those of you that had questions about AMD, listen up. To me, it looks like price is going to stay above 180 for the next few days, even if it starts to fall further. But that by next week, it looks like it could breach it and do this based on price action. So I decided to bring in some premium by shorting the 180 put. Now, if I'm shorting the 180 put, I want price to be above 180. Because if they're going to give me $3.25 in credit for this 180 put, I want the put to expire. Because if the one, forget about minus or plus, if the 180 put contract expires on Friday, worthless, then that amount of credit that I took in for it, whether I combined it with another trade or not, I get to keep it. Understand? So how would on Friday, how would a 180 put expire worthless? What would have to happen for the 180 put contract for this Friday expire? Where would price have to be? If you got a 180 put, Taterhead, what do you want price to do? How does this gain more value, Taterhead? Let's just stick with this question. If you buy the 180 put, you want price to go down, right? Why? Because then it's in the money. The contract for the put would be in the money, right? So if price went down to 175, this 180 put would be worth $5, correct? But what happens if you bought the 180 put and price went up to 181? What happens? Yeah, it'd be worthless, right? Because you wanted it to go down. Now the contract isn't worth anything. So my first question to you was, this 180 put that we shorted, the market, because I sold the put, the market maker gave me $3.25 for it. So as long as price stays above 180, this put will expire worthless on Friday, right? And then I get to keep the credit. Hence the calendar trade. I sold the 180 put for Friday. They gave me $3.25 for it. The cost of the 180 put for next week was $1.25. I'm sorry, it was what was it, $5.25, something like that. It was pretty expensive. It was $5.25. So that's credit, debit. So I'm using the $3.25 credit for this week's 180 put that I sold to buy the 180 put long, right, for the following week, which was $5.25, meaning the net cost of the trade was $2. And as long as price stays above 180, this 180 put will be worthless, as you said. Does everybody understand it, or there's still more questions? You see how this works? So this move up in AMD is a good thing for the trade, not a bad thing. It's a good thing because it allows for the 180 put, for the most part, to remain out of the money. And as long as the 180 put is out of the money, I get to keep this credit. Yeah, if price goes in the money, then you can do a number of things, Geneva. And this is also in the 10 musts to master. This is in the material. One of the things you could do is you could roll the put to next week for an additional credit. One of the things that you could do is buy back the short strike. You could buy back the 180 put and leave the 180 put in its place. You could you could buy back the entire vertical if you wanted to get out of the trade. So there's a number of ways that you can manage the trade. The other thing that you could do is you could convert it to a butterfly by buying a put debit spread. Depending on where, price is, you might be able to buy a put debit spread and a put credit spread. You might be able to buy a couple of verticals to convert it. But the best thing to do, you just roll one leg. You could, but it depends what you wanted. It really depends on where you are in the week. The best exit strategy is just you buy back the short. So they gave you 325. You might have to give it back. And then if you gave it back, you'd be left with the 180 put at a much higher price than you really wanted to pay for it. But if price did dump, you got the 180 put. Now, just to show you what you can do, watch. So if I sold the 180 put for whatever it was, right, 325, and I bought the 180 put for next week for 525. This is for this week. So what happens? The price starts to go down. I'm like, you know what? I'm nervous about this thing, so I'm gonna buy this thing back for like whatever, $3, $2. Let's say $2. And now I no longer have it. I still have this, but price is now, maybe price is closer to 190. It's starting to get close to this. You know what you could do going into next week? Now it's next week. I'm sitting on this. I don't have that. But price is now moving down the way I want it to. You could go ahead and sell the 200 put. It's a little closer to the money. Now you could sell the 200 put, bring in some more premium for this. So there's a number of things that you can do. Next week's, repeat the second leg. The second leg is just a put. So the trade I want is the 180 put for 3.6. That's what I want. But it was too expensive. It was over $5. It was like $525 to buy the put. So to help finance it, I saw where price was yesterday here. And I looked down and said, I think price is going to come down to eventually going to come down to 170 right here. Yeah. I could buy the 170 put, but that's way out. So I decided, let me buy the 180 put. I like that, but it's too expensive. But I'm far enough away with price sitting at 200. I'm far away from 180 right now. I think price is going to stay above 180 and at least for the next 3 or 4 trading days. So let me sell the 180 for this Friday and bring in a credit of, say, $325. That lowers the price of this put that I wanted down to a reasonable $2. The market maker is trying to screw me. Do you understand? By overcharging me premium. Why are they doing that? Because they're the casino, number one. Number two, volatility to the downside is very high, so puts are expensive. There's a lot of people still buying them, but they're buying them because they're stupid and they don't understand pricing in this market. They will not make money buying puts at this level down here. If they bought these, they're going to get screwed unless price drops to 170. But if it only goes down 5, 6, 7, 8 points, they're not going to make any money. These are priced to expire worthless. So what do we do about that? Well, we can incorporate good analysis. We can incorporate bringing in some premium to our advantage. Now, who has the advantage in this game here? Somebody who bought the 180 put because they think price is going to go down for 525, or you and I, and we only spent $2. Which one has more risk? We do, because price could drop below 180 very quickly, and we would have to buy it back. So we do have more risk. But assuming that this trade begins to work out where price stays above 180, this expires worthless on Friday. Or you could buy it back right now, as someone suggested earlier, for like 20 cents, you could buy it back. And then you're out of it altogether. And so then this ends up costing you $220. Who's got the advantage? Me at $220 going into next week, or them at $5.25? I paid less than half than they paid. Advantage, trade with me now. Do you see? You must learn how to take advantage. If you go to a casino, other than straight up luck, which doesn't last, the only way that you can walk away with more money than you walked into a casino with is you must know how to take advantage of certain aspects of the game via strategy, via money management. Yeah, so that you can steal the edge away from the casino ever so slightly so that you have an edge to be able to make money. I don't think there's one person in the room that would disagree with what I just said. Yeah, you should know. Well, more important where the break even is, Roadrunner. You should know what your risk is. Just know your risk. The break even is okay to know, but that's not nearly as important as knowing your risk. And once you know your risk, then you can trade accordingly and then set your own risk reward based on your own tolerance. So what we have created with this trade, to wrap this up, is I, through analysis, looked at AMD and thought, AMD is going to go down even further. I think it'll come down and retest 170. It might do it by in the next 2 weeks. I'd like to buy a put too expensive, sell some premium to bring down the cost, and I now have the 180 put. It looks like, based on this move, that the put will expire worthless. So now my risk, my total risk, assuming price stays above 180, my risk is $2 for this 180. I cannot lose more than 180 because that's the cost of the put. Now remember, some say, well, what happens, this week if price went down lower? What's my risk? Well, remember, you do have a 180 put that will be making money. So even though you're losing money on the 180 put that you're short, you're making money on the 180 put long. All right. Any other questions on AMD before I move on? So right now we just sit tight. Let's see what happens. If price continues to go up, the trade did not work. We'll wait for some kind of move. I imagine even if price continues to go up in AMD, it will have a pullback before March 6th. And if it does have a pullback between now and March 6th, I will use the pullback to ease out of my long put. And that will be that for the trade. Yeah, the puts right now are $1. So if you wanted to get out of the trade right now, I don't suggest that you do this, but as an example, you could right now buy back. You could buy back the short strike, the 180 put right now. You could buy that back for $16. Boom, out of the trade. You now have zero risk. You've already spent the $2. So if you buy back the short at 16, your risk goes to zero. You do have $200 on the table that you spent, right? So you already know that debit that you have. If you no longer wanted to be in that trade, you could sell that long put right now for 108. And if you did that, you'd lose $92. So you would only have lost 92 and you'd be out of the trade. If you buy back with the 16, obviously it would cost you $16. So it'd be like 108 total. So that's how it works. I personally do not recommend that you get out of the short right away. I'd wait a little bit. Remember, price would have to dump in order for you to be in trouble with your 180 short going into Wednesday. Price would have to drop 34 points. Is it possible? Yes. Is it possible that AMD drops 15.8% between now and Friday? It's possible. Not very probable. All right. Any other questions on AMD? Can we move on?
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.